Hi, this video is for SAP FICO Training. Okay, so if you look on the left-hand side here, you can see I have level 1, level 2, level 3, level 4, right? So there's different levels to, for example, SAP FICO Training. This topic is vast. There isn't enough whiteboards in the whole world to cover all of the different topics and subtopics and subtopics of the subtopics to go through and write down. So we have to go through them one small subsection at a time, maybe 2 subsections at a time. Okay, so you see FICO Training is the highest level. Okay, within FICO Training, we have the general ledger. Okay, so everything I'm going to be talking about today is related to the general ledger and SAP FICO Training. Okay, now within the general ledger, going down to level 3, you have periodic processing and financial closing. Okay, now within periodic processing and financial closing, you have these 2 topics. 4 levels in, okay? So this video in particular, we're talking about intercompany reconciliation and we're talking about foreign currency valuation. So if these videos are helping you on your SAP journey, please like, subscribe, share, and drop a comment in the section. In the comment section, let me know what's your favorite color, okay? All right, and I won't waste too much time. Let's go ahead and dig into it. So I got one more video to record after this. And I imagine this will be 15 to 20 minutes. Okay. Okay, so how I like to format these videos, instead of just giving you information, it can become quite redundant after a while. Everything starts sounding the same. So what I do instead is I formulate the information into questions, okay? Questions that we, if we can retain the answers to these questions, we'll know everything about these areas of discussion. Okay, so once I'm done with intercompany reconciliation, I'll wipe it off the board, let you know we put that to bed, and we'll move on to the next topic. But right now, we are full speed intercompany reconciliation, also known as ICR. So, what does ICR provide? Periodic reconciliation of documents between entities. What must intercompany documents between different entities do? Match each other. How does ICR match documents? By document assignments. To configure intercompany reconciliation, ICR, what must be configured? Intercompany relations between company codes. What do all company codes that post intercompany documents need for ICR to occur? To have general ledger accounts assigned to them that are debited and credited when making intercompany posts. Okay, let's go into ACP. Let's go into SAP, okay? I have a menu path that I want you all to follow, okay? We're going to go through financial accounting, general ledger accounting, business transactions, prepare cross-company code transactions. Okay, so once you get into this transaction, there's going to be the system will prompt you, and it's going to ask you to enter in the 2 company codes. Why do we need 2 company codes? because we're doing intercompany reconciliation, and there's going to be a minimum of 2 company codes that have to be configured. Okay, so you enter your 2 company codes there, hit the green checkbox. I have this stuff on the screen. All right. Okay, so that'll bring you to this screen. So at this screen, here are the receivable and payable account numbers that are posted to for intercompany reconciliation. You see them highlighted in a red box there to the right, right? One of them's for company code 1, and one of them's for company code 2, one set of them, okay? Okay. More information on this same screen. I want you all to note that the postings occur in one company code and clear against the corresponding intercompany reconciliation company code. Okay? So if you look within that red box, the first red box I got there, you'll see it's posted in the first company code, and it's actually clearing against the other company code that we entered when we first got prompted, right? Those are the 2 company codes. And then it reverses down in the other company code. It's posted in the second company code and cleared against the first one. All right? And I want you all to know that all the postings that get captured here, they'll be eliminated in reporting, right? Because you don't want to be telling the government about, sales that you're making to yourself type of thing. They want to know, revenue that's made selling to other people or other business, other entities, other legal entities, completely outside of your umbrella, if you will. So the whole purpose of this is to capture these intercompany when the business is selling and buying from itself, okay? We want to eliminate these from our financial reports. All right, that's it for this guy. So we're wiping out intercompany reconciliation. Okay, and now we're moving on to foreign currency valuation. Question: what is an open item? An incomplete business transaction created during postings to a contract account. What is an exchange rate? The value of one currency for the purpose of conversion to another currency. What is foreign currency valuation? The process of revaluing open items and balances in a foreign currency to reflect changes in exchange rates at the end of the period compared to the time the transactions were posted. Okay, so we're going to follow a menu path again, and what we're doing in this menu path is automatically post accounts to foreign currency valuation. It's the configuration of doing this, okay? So we're going to follow this path: financial accounting, general ledger accounting, periodic processing, valuate, foreign currency valuation, prepare automatic postings for foreign currency valuation. Alternatively, you can enter T code OBA1. Okay, and this is going to bring you to this screen. And I want you all to know, see that red box there? Okay. What we're trying to do here is we want to revalue open items in foreign currency. That's why we are in this transaction. So to do that, we want to click on transaction KDF. That's the exchange rate difference for open items for GL accounts. That'll bring us to this screen. So on this screen, we have a full list of open item GL accounts that are configured to be revalued for foreign exchange rate differences. All open item accounts here. Okay? So what we're going to do is we're going to double click on the first account. I have it highlighted in red there. That'll bring us to this screen. All right. So on this screen, if you look at the red highlighted area, I'm about to explain to you all the configuration that's made in each of these fields within that red highlighted area. So you're going to know what all that stuff is, the loss gain, valuation, loss gain, BS adjustment, and all that jazz. Okay? And it won't be long from here, guys. All right. So the first field, notice that is in the exchange rate difference realized sub-screen coding block. Okay? So loss. That field is account, that's the account for realized exchange rate losses. These are account numbers, okay? I want you to know that this account is posted to when the loss is realized during the clearing of an open item. The next field for gain is the account for realized exchange rate gain. This account is posted to when the gain is realized during clearing of an open item. Okay? In simplest form, guys, this is just saying, okay, the loss is when the currency, the rate changes and we end up losing money on a deal. It'll go to that account. When the rate changes and we actually made money on that rate change deal, then that difference will go to this gain account. That's all this is saying, okay? All right, now we're in the valuation area. Valuation loss 1. Account for loss realized during the foreign currency valuation period end closing program. Okay? So before we were talking about during the clearing of an item, but now we're talking about during foreign currency valuation period ending and closing program. Apples and oranges, okay? These are two different time periods. Valuation gain 1. Account for gain realized during foreign currency valuation period and closing program. Something tells me that you figured that out already. All right. BS adjustment 1, okay? This account is used to post the receivables and payables adjustment during the foreign currency valuation of open items. When the adjustments needed, they go here. Okay. All right, now we're in the translation area. Loss. After the foreign currency valuation program posts a loss and after the item is cleared, the loss is posted to this account. Can't say it any clearer than that. The BS adjustment loss. This account is used as a clearing account for translation based on a gain. All right, this gain field here. After the foreign currency valuation program posts a gain and after the item is cleared, the gain is posted to this account. And the BS adjustment gain. This account is used as a clearing account for translation based on a loss. Okay, and I also want you guys to know something here, take note, just how all those fields that we just talked about, all of that's the same way. If you were to go back to the other transaction, the automatic exchange rate transactions that you can find in T code OBA1, all of these can be configured the same way. Okay, they have the same fields in that. All right. And that concludes it for this video, guys. If these videos are helping you on your SAP FICO journey, please like, subscribe, share, comment in the video. Let me know what is your favorite number. All right, guys, until next time, take care. Peace.